talk about some of the market action as we do each and every Tuesday and Thursday at 3:30, folks. We're going to jump over to our man Tim Ord. You can reach him at his website every trading day, ord-oracle.com. And don't forget, right under the services tab at TFNN, Tim's got a couple great webinars: The Secret Science of Market Tops, how to identify market tops, as well as 6 secret ratios every trader should know. And we talk about some of those, the SPY VIX in there, TLT VIX in there, as well as some others. You can check those out. You buy them, folks. They're on your members page forever. Watch them as many times as you like, whenever you like. Tim Ord, good afternoon.
Good afternoon. So, actually, things are looking okay. First chart we're going to look at, this is the, actually, it's a 3-day average of the SPX VIX ratio, and this is a monthly chart. So, yeah, the monthlies rule the weeklies rule the dailies all the way down. So if the monthlies start to go a little bit haywire, then you kind of flip down to weeklies and you try to get close to the tops as you can. And this is a moving average, so there's actually a little bit of divergence on the SPX VIX ratio on just a 1 day. Anyhow, the 3-day slows things down a little bit, and so far we're still making higher highs as the S&Ps are making higher highs. So bigger trends still up. And I notice over the last actually several days, the trend's starting to rise again. Like the 2-day trend, actually the 5-day trend's up to 1.2 right now. The 10-day trend's still below 1.2, but they're both kind of rising here. So I think this rally has further to go. But there's kind of a warning sign starting to be in the market. These divergences, here's the SPX VIX ratio on a, it's a daily, this is a daily time frame. And back at the September high, you were going up. This divergence lasted a month. That's about 4 weeks or 3 weeks going up. The S&P still kind of going up. So we got a divergence right now that's probably about 2 weeks old. Going to continue. It may, I think we're still going to hit new higher highs. So it's a little bit of a leading indicator. The monthlies are bullish. The weeklies are showing actually the dailies are showing a divergence here, but this divergence can last a while. So, kind of little warning signs. I'm still long. I think the market still has, maybe anywhere from 2 to 5% to the upside. I don't think we'll get 10%, but February could possibly spill some trouble. We'll have to wait and see. But since the 5-day trend and the 2 and 3-day trend all lean bullish, so we got a little fear in the market. So that's a little bit of fear. You got energy. So on a short-term basis, I'm still bullish here, but I'm kind of watching what the VIX is doing. This is the daily. A couple of days, actually yesterday we had 1.45, and last time I checked the trend here about an hour ago, I think we're 1.12. So it looks okay. So as we're rallying here, the trends are kind of high, and so long as that is persistent, we should go higher. When you get the 10-day trend up around 1.9 or down around 1.9, it's time to worry, and we're not there anywhere near yet. So I think this month is still be an up month. February, I don't know. We'll see as we cross that. And actually what I want to get to, we had some interest. We talked earlier in the week, and you were talking about the silver market. You mentioned something about the silver market, and
I sure did. They're talking a lot about silver and even today we got more volatility, right? I mean, this is the tiger's den. The memes write themselves almost, but yes, silver for sure. Please.
All right, this is the silver gold ratio. So anyhow, I put the bottom. So what I do, I measure the velocity of the advancing silver gold ratio and measure the velocity of the down. Depends how fast they go. The faster they go, the more times you're going to run into a reversal. So it's all about acceleration on these indicators. So if they're just kind of moving up slowly, usually that's not a sign. When they move up real fast or down real fast, normally you're close to a reversal. So this one is the rate of change, ROC 12, which is basically the kind of standard ROC number they use of the silver gold ratio. And one below that is percent B. In other words, it's either it gets above the upper Bollinger Band, which is anything above +1, and anything below the lower Bollinger Band, 0. So I marked over the last, this goes back to 1982, looks like. And all the times when those two kind of acceleration indicators have reached peaks of that ratio. So it measures the acceleration of this silver gold ratio, either up or down, which what direction you're going. And we're kind of getting high here. And these are all the times it's RIS squares. This is monthly XAU in the top window there. So I always start off with the monthly and work backwards, and it works pretty well. Anyhow, all the boxes there are times when the ROC and the percent B, which is basically hitting this upper Bollinger Band, and we're actually in that area right now. So okay, so don't panic. And also, there's another thing here too. This silver gold ratio, and I marked in blue here. Kind of the danger zone going back to the 1980s, anywhere from 0.018 to, I don't know, 0.021 looks like. And so I marked it blue right here. And we're actually hitting that right now. So we're hitting it right now, and the acceleration of this ratio really blew through the tops to the upside. So on a monthly time frame, this silver gold ratio, in other words, silver compared to gold, silver way outperformed gold. And it got to a point where it's really stretched. And how far can it get stretched? Yeah, it can get stretched more, but it's into the warning area. Okay, so what's that mean? So we'll keep going here. Let's go back to this one. So it's stretched in there. So how far can it be stretched? I'm just saying this is a monthly chart. Can this thing be stretched for the next couple of months? Yeah, it can. So now you got the monthly in kind of a warning zone. It's not at top. Hasn't said anything about a top, because this ratio could actually move up all the way up to 0.03 for all I know. Whoops, I hear the music.
Okay, we'll talk about, I mean, those are some charts, man. I love how they line up, and you always line them up historically in terms of where they match up when the indicators are kind of where they are right now, and that's a chart, man. And boy, quite a year Silver set. Year. I mean, last year and starting off this year. Folks, we're coming back with Tim Ward. We're talking more silver. We're talking more metals. Stay tuned. We'll be right back. Welcome back, folks. You got silver right now. Tuesday, you're at $82. Earlier today, we're at a 73 handle. We're trading at 76.54, off 1.4%. We're talking with our man Tim Ward. Don't forget, folks, he's got a couple of great webinars at TFNN, and also his website ord-oracle.com for his newsletter. All right, Tim, keep going, please. Silver.
All right, silver must. Anyhow, what's this chart mean? It means silver is way outperformed gold to an extent where silver is probably going to hit a consolidation just like it has in the past. But this is a monthly chart. This consolidation doesn't have to show up today, but I bet it does show up in the next 2 months. That's how I'm saying it. So silver could go to 100, but this is a warning sign that we're into the blue area here, and these two indicators are extended. So when that happens, it's gone up too fast, too quick, but it still can go up more. So it's not like time to get out of silver, not at all. Now so there's a consolidation coming. It's not like 6 months away now. You're probably talking a month or 2 months. That's how I'm viewing it. And we'll get down to nitty gritty as we get closer. So, but right now, I'm in actually silver stocks. I don't see a problem yet, but it could turn into a problem. Here's another one. I'm looking at silver or silver miners compared to silver. So you're measuring the stocks against the metals, and there's cheap air. In other words, when this ratio gets below 1.25, or actually 1.25, that means silver stocks are cheap compared to the price of silver. So, and I marked, I took as far back as I could. This goes back to 2011. But anytime it got below 1.25, which is right here, and that's the reason why I marked it here, and we did again in this, that was the top. Then again here, 2023 to actually 2025, or about 2 years, it stayed in the buy area. And that's that point here. And actually, we were, this is silver miners right here, and it's still rocketing up, and this ratio went back down. So the rally in silver stocks are not keeping pace with the price of the metal. So historically, this is a good buy in regards to silver stocks. Even though silver may be hitting high, the silver stocks may keep going. I don't know, but in the past, anything below 1.25, which we're actually right there right now, has been a good buy. So what that says to me, even silver may take a consolidation. These silver stocks actually could still move higher because this ratio is so cheap. That makes sense.
I was just pulling up on my chart, Tim. As you make great points, man. And sometimes, right? And it seems like even more recently, we've had huge accelerations on silver, and then the equities don't react in a way where you have silver up $15 or $10 in a few days. But even I just cherry picked a day like December 10th, right? And I'm looking, and silver was at around $60 then. It's at 76 right now. That's almost 25% since even December 10th. And I just cherry picked a day, and then I'm like, all right, what's Pan American at or something like that, right? Well, Pan American's only up 10%. Pan American 7, like First Majestic, only up like 10%. So it makes sense in terms of where they are, the run it's had, as in anyway, thought I'd add to it. But yeah, even some of the biggest equities out there for sure.
Yeah. So when things get and they will at some time, this ratio will get up to here, and that'll be a warning sign, because previous times it happened, it was up in this area and this area and this area here. We got a long ways to go. So these silver stocks, relatively cheap compared to silver, are still a good buy. Trouble is, we got silver probably hitting some sort of a consolidation phase, maybe, like I said, because of the previous chart, in the next couple of months. I don't think this rally could go on to June. It needs a rest somewhere. So, let's look at the bigger picture. I keep showing this chart. If you want to invest for the long term, I think gold stocks for the next 10 years, because we have a potential 12-year cycle that's gone on in the past. And we started this 12-year cycle in 2024. You had 12 years to that. You come out with 2036, even though we'll have consolidations in the past. If you notice, I did an RSI on here, and current RSI as of today, it's up around 71. Previous times we had 70 or times like there. So we're due for consolidation here, and probably, not too far away. It'll be more of a sideways move. Normally when these bull markets begin, they don't let you in cheap. What will happen is probably a lot of these will do a cup, and they'll do a handle, like William O'Neill's cup and handle thing. I don't know if I probably should put that method up, but a lot of times they don't pull back, they go sideways, and I think that's what's going to happen to most silver stocks. They're going to go way up, and they're not going to pull back much. I bet 38.2% retracement is best you're going to get. You're not going to get a 60% retracement on these issues. They're just not going to let you in cheap. But there's another sign with the RSI of the XAU to NDX ratio up to a level where you're going to expect consolidation. So I still think a consolidation is going to start somewhere in February, March. I don't think it's going to be this month. So, but anyhow, this is XAU to NDX. So this is measuring gold stock against the NASDAQ stocks. So let's take a look at the gold stocks against the S&Ps. So you got a totally different picture here. This chart goes back to 1982, back there, and we're up against a line. This is the ratio. This is the XAU gold ratio. I probably should have put that in there, but this is the XAU to SPX monthly ratio. So it's measuring gold stocks against the S&P stocks or equity stocks. And Trend line analysis works pretty well. Went back down, came back up, found resistance there, rallied up, hit that resistance, kind of stayed there for a while, and now we're basically running into the 2002 lows right here, and we hit it in 2016, again 2020, and we're banging against it right now. So does that mean resistance? Well, the more times you bang against a top, the more what's going to happen, I think. This is the third time up. A lot of times it's not third time. A lot of times it'll be the fourth time. But at some point, I think we're going to go right back up to this high back here. So I think these gold stocks are really going to outperform the S&P stocks in the years to come. So this is really the place to be, probably the only place to be, in my opinion. And I'll change my mind, too, on this if things turn to crap. And so far, they're not. All the longer-term charts are really showing that we're still in the early stages of a major move up. And I keep bringing this chart back here. This move up with the XAU to NDX, I call it initiation of a major uptrend. When you get the RSI hasn't been up to this level since going back to 2006. That's 20 years ago. And finally we hit that. They call that initiation of an uptrend. And so this is still in the early stages of a major bull market in these gold issues. And these gold issues are going to outperform the equity markets and the S&Ps and the NASDAQ. So something really
pretty cool, man. I appreciate you laying that all out. I agree with a lot of what you're saying. I was going to add, we're wrapping up gold. Just so much volume in this recent run up too. October, man, you had massive volume. Silver, even more so. Tim, thanks so much, man. Look forward to talking to you next Tuesday.
All right. Thanks a lot. Talk to you.
Take care. Folks, check it out, ord-oracle.com. He's got great webinars on that services tab. We'll come right back.